Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Dugal. These are our headlines. The Nifty reclaims the 10,200 mark for the first time this summer. Financial and energy stocks lead the rally.
HDFC Bank's asset quality remains stable in the second quarter. Net interest income rises 22% year on year.
All eyes on Infosys results this evening, first quarter after Nandan Nilekani's return to the company.
Crackdown on shell companies has unearthed suspicious cash worth $1 billion, says Junior Corporate Affairs Minister P.P. Chaudhary in an interview to Bloomberg.
And 3 out of the 6 parties that have shown interest in Essar Steel's assets are foreign players, reiterating the interest in the stressed steel sector.
But first, let's take a quick check of how the markets are faring today. Neeraj is taking a closer look on some of those stocks that have been holding on to morning's gains. Neeraj?
Yeah, and frankly, the Nifty Bank as well, which is held up today by PSU banks and giving support to the market. So the Nifty and the Sensex about 0.25%, but led predominantly by what the Nifty Bank is doing, which is up about 0.5%. And if you just look at, yes, the headline numbers would show gains for a Zee Entertainment, which is a results reaction, or an ONGC, which is holding out for a better part of the trading day today. So that's essentially, yes, the headline movers on the index. But it is, ahead of earnings, I think if you look at IT, that is showing a bit of a sluggish move. So Nifty IT or HCL Tech or Infi, all of them are down. But it's really about the banks. Name a PSU bank, be it State Bank of India from the large cap space or a central bank, BOI, Union Bank. All of these are fairly excited. I don't know, it's going to be a busy afternoon for ERA maybe. You never know that.
The stocks are excited. We have no information about what is coming though.
True.
But yes,
it's
certainly.
supposed to be a major announcement by the finance minister.
And we're not the ones calling it major.
We're not the ones calling it. The PIB is calling it a major announcement. We don't know what it is.
Yeah. The market also speculate, right? So market is speculating, hey, maybe it's PSU Bank recap or maybe something on those lines, or maybe ERA has some other things that she has an opinion on, which, they could be. But yeah, the markets love this. So look at the PSU banks, they are up and active. And frankly, that's the thing that is the talk of town right now. Yes, and then a few result reactions. Zuari, Global, and Hudson, and Havels, etc. But frankly, it's all about PSU banks right now.
I just want to bring one chart up, Neeraj, and this is something that we've been speaking about for a while now. Investors have put in nearly $18 billion into the market so far this year. And here's the interesting one, and that's what makes this chart interesting. The blue line is the mutual fund money, month-on-month mutual fund money. The white line is foreign investor money. While it's been steady, it kind of gives you the sense where the shift is taking place. That's 18 billion so far this year. And it's a pretty interesting track record so far, isn't it?
Yeah, and maybe that's why Reliance Nippon AMC has chosen this time to get listed, because everybody's talking about only one thing. Hey, the money is coming into mutual funds and it'll keep on coming into mutual funds. It's the best time for AMCs to get listed. But yeah, frankly, it's an amazing statistic. Just one thing and goes to show that, yeah, this last 2 months, at least, if not the year, have been all about DIs supporting the market and not the FIs.
Correct.
All right, Neeraj, thanks so much for that. Just a brief mention of what we were talking about earlier. The finance minister will address the media at 4. Just flagging that off because some of the market movements this afternoon seem to be linked to what could potentially come out at that briefing. All right, staying with banks, but this time to the private bank space, and the most consistent of performers, HDFC Bank has reported a steady set of numbers. Shraddha Babla is standing by with the details. Strong growth in net interest income, net interest margins, and net profit growth also steady. Shraddha.
Yes, along with the strong and steady growth in NII and net profit, ERA this time around, the operational or pre-provisioning profit has also grown by significant 29 to 30%. That's on account of a strong other income growth. The fee income growth this quarter has also come in at a strong 24%. The June-ended quarter had also seen a 30% sort of a fee growth number, but the management had said that there were some one-offs over there, but 24% this quarter as well. Provisions have narrowed down marginally on a sequential basis, 1476 crores versus 1559 crores. So all of these together, the slower OPEX growth, strong other income growth, and steady provisions have actually led to this significant bump up of 20%. as far as HDFC Bank is concerned. If you look at the asset quality, again stable, 1.26% versus 1.24%. Last quarter we had seen a big bump up on account of the agri slippages, so we need to understand what has happened as far as those numbers are concerned. When it comes to the loan growth, 22.3%, again in line with the 20+% trend that we have been seeing for many years, except for of course the first 2 or 3 quarters after demonetization, where that number slipped below the 20% mark. Like what we had seen in the June ended quarter, retail loan growth has come in at 21% and wholesale loan growth at about 23%. So again there's a trend reversal. Wholesale loans are growing faster, so the bank is probably looking at good opportunities as far as working capital loans are concerned. CASA growth was one of the concerns that we were addressing in the morning, but that has come in at a strong 23.6%. Having said that, the CASA ratio has fallen again by 110 basis points from 44% in the June quarter to 42.9%. So we need to understand why that has happened, especially because the June quarter number also has seen a 400 basis points reduction in that CASA number. But apart from that, everything looks steady. Earnings growth momentum and loan growth, business growth momentum absolutely in line.
Shraddha, thank you for that. Let's talk about Zee for a moment. Zee Entertainment saw a spike after the company's profits more than doubled to 591 crore, an exceptional gain of about 135 crore from sale of its sports broadcast business. Aiding to those numbers, that stock is up nearly 5% in trade today. That's Zee for you. But the street is really watching out for Infosys. The IT giant will post numbers after market hours, and it's the first quarter after Nandan Nilekani returned to the company, albeit in a non-executive chairman role. Agam is standing by with the expectations of what the street is factoring in. The CEO search is on the annual, Agam. What else from a numbers standpoint is the market looking out for?
Absolutely, Harsha. It's going to be more about beyond just the numbers this time around. But, let's get the expectations out of the way. So in terms of expectations, we're expecting about a 3.5% increase in dollar revenues. Operating income likely to see about a 3.3% growth there as well. EBIT margins expected to come off to a certain extent to around 23.6%. Profits, consequently, could see a 1.3% sequential growth. But big question is, well, what can we expect when it comes to its guidance? Can we expect a downward revision? Well, UBS is of the opinion that they're already factoring in a top end come off when it comes to its guidance, and it's already in the price of Infosys. UBS, IDFC, as well as Kotak Securities, all of them are of the opinion that a complete downward revision of the guidance range cannot be ruled out. What is it that's going to bear down on Infosys numbers? Of course, the softness in BFSI and retail, something that we have been talking about, of late. And other than that, when it comes to its margins, there is going to be pricing pressure for Infi. We're also expecting the full impact of wage hikes to play out on the margins as well, especially given the fact that a lot of these wage hikes were effective from July. But the big question is, how will Infosys chart its strategy out? That is also one major reason a lot of investors will be keeping an eye on its board meet, and of course the update on the CEO and its search. Now, this morning we did have a newspaper suggest that we could have Infosys, as a matter of fact, announce a CEO today. So that'll be another factor, other than the fact that what is the trend on client spends and all. But perhaps the most crucial factors will be strategy, the CEO search, and whether or not we can expect a revision of guidance.
All right, Agam, thank you for that. Let's get in Ravi Menon, research analyst at Elaris Capital, joins us on the phone line with his expectations. Ravi, thank you so much indeed for joining us. What are you working with this quarter? What are you watching out for?
So we are expecting a downward revision of guidance, just like you had said. So we are looking at them revising the top end of the guidance down by 100 basis points. So we look at 6.5 to 7.5% in constant currency terms being the new guidance. And for the quarter specifically, we are looking at 2.7% in CC terms and 3.9% in dollar terms, QOQ growth.
Okay. Ravi, Accenture's just reported that they've seen a pickup in their bank clients, specifically from a spending standpoint. Are you hoping to hear from Infosys on the same lines?
Not really. I mean, I think that, they will be very guarded, I expect, in their commentary, because we have been of the view that post Dr. Sikka's exit, they should have some pressure from the clients, especially the ones who've been early adapters of the platforms that Dr. Sikka's team had created. So there is no clarity regarding what will be the strategy for the platforms going forward. So those who have invested in the platforms, I think people like Johnson Controls and Kraft, those early clients will have we're expecting some sort of backlash there. So I think that until the new CEO takes charge and they go and meet all the clients, I don't think they'll make any commentary specific to about demand, because every company's commentary is essentially it's based on their own client base and they can't speak for anybody else.
Okay, what specifically then are you hoping to hear from the management today?
Some clarity regarding the CEO, if it's an internal candidate, which we think it's more likely to be. We expect even the CEO to be announced today. So then after that, it will be a little easier. The whole organization will settle down. I think having a CEO replacement quickly, that's really key.
There's been, a slightly broader question, Ravi. Where do you think the stock is headed? There's been so much uncertainty, while even if the operating environment slightly improves, where is the stock headed? I'm asking in the context of we've seen a significant buyback being announced, which was, if I'm not wrong, at about 11.50, 30% premium to the then prevailing market price. The stock is, if I can just bring the stock up on the screen for you, the stock is nowhere near those levels. What would be your medium-term sort of call on the stock? Because despite an important trigger of a buyback, you're not seeing any improvement in the price, are you?
Not really. I think that people, the acceptance ratio is not expected to be very high because of the high amount of free float, and the promoters themselves are also tendering. So you see the reception to the buyback. It's fairly good because of the premium that you mentioned. Almost everybody will be tendering their shares, I expect, and that of course lowers the acceptance ratio. So there is not much room for arbitrage between the current price and the buyback, and that's why we've not really seen that the stock react very positively. And we think that Infosys competitiveness is fundamentally challenged with this forced change in strategy, because we were extremely bullish on the Infosys platform strategy, and we had good feedback from clients as well regarding that. The Infosys clients. So that's now. With that out of the way, if they're pivoting to a new strategy, can they really catch up with the peer group who have invested years behind a consistent strategy for digital? So you've got TCS with Ignio, with Pro with Homes, and its FPD acquisition, Designet. So Infosys made Discover and Panay acquisitions, but I don't know if really too much management attention is going to be devoted to these, because these were Dr. Sikka's. It was part of Dr. Sikka's strategy. So if they're pivoting it, I'm not sure. We should probably look at what acquisitions do they make. I don't expect anything near term until for the next 6 months, we should see and evaluate the new management on execution. So no near-term triggers in sight.
Okay. One final question. Large deal wins. That's something that Infosys has been pretty consistent, despite the gloom and doom and the disruption in the environment. They've done pretty well on large deals in the last couple of quarters. Are you expecting this run rate to be sustained?
Again, I think that will be a little slow probably for the next 3 to 6 months, because I don't think clients would also be happy to award a deal to a vendor who is going under. You don't know who your counterparty is. Whether they will be a strategic vendor, whether you can actually take them on as a partner. So I don't think that they will be able to sustain those win rates until there is some clarity about their future strategy.
Ravi Menon, thank you so much indeed for joining us. Ravi from Elara talking about Infosys. Those numbers are going to be announced later today. Watch out for the management of Infosys. That's going to be, there will be commentary from the management later this evening. You can watch that all on Bloomberg Quint.
All right, moving focus from earnings to one of our top corporate stories, which we've been tracking since late yesterday evening. Vishwanath Nair of Bloomberg Quint has learned that there are enough takers potentially for the assets of Essar Steel. Expression of interest that came in yesterday brought in 6 potential buyers, Vishwanath, including the Ruyas. First, just run us through the details.
So as of now, looking at the number of people who have put in their expression of interest, there's 5 large metal companies, including, and the Ruya family, which is a promoter family for Essar. The large guys include your Tata Steel and SAIL, who are the domestic players in the game. There's also ArcelorMittal, Sumitomo Corporation, and Vedanta Resources, who put in their expression of interest to try and resolve the Essar Steel case. Now, this is the first stage wherein you show interest so that you can then go ahead and create a resolution plan. Depending on meetings with the lenders, they will come up with a sort of criterion, the kind of valuation that the lenders are expecting out of this asset. And then they would sit and create a resolution plan which will be submitted by the middle of December. Then based off that, they'll figure out whoever is the final bidder who will take over the asset and probably turn it around.
So it's not correct to call these guys bidders yet. They were interested in the asset. Now they will go through the due diligence, etc., and see whether they want to bid. And the level at which they bid at will probably be important for banks.
That's right. So as of now, they are people who are eligible for turning around the asset. That's essentially how you can define them. How many of them will actually stay with the final bid, because now they will get access to the company's financials, and then they will be able to figure out whether this is something that they want to get into and probably help turn around. So what they arrive at as a possible enterprise value for the Essar Steel assets and possible equity that they are willing to invest in the company, that will determine the banker's interest in the deal, if whatever it is, at the end of the insolvency process.
But surely, Vishnatha ma'am, you've been speaking to bankers even ahead of this particular deal. It is encouraging that we are seeing large strategic players interested not just in Essar, but some of the other assets like Bhushan Steel, Electro Steel. There are a lot of distressed, stressed assets. It's good to see strategic players come in, which probably suggests that they'll be able to get, banks will be able to get a little bit more out of these assets.
That's right. So I'm just talking about the Essar Steel case. This is something that they've been trying for a while, trying to look for buyers. They did this in November 2015. They hired investment bankers to look for potential bidders. Nothing came out of that process. That process completely failed. And then now, through the insolvency process, you have more people coming in, possibly because there's a legal backing under insolvency. There's also defined timelines. So people are more confident in trying to get into this asset. So yes, it is quite encouraging for bankers. Whatever they've tried in the past has not worked. This is something that shows some kind of promise so far. How this is progressing in the next 2 months, what we'll see on the deal side is something that will be something that the bankers will be watching for sure.
Vishnatha, thanks so much. That's Bloomberg Quint exclusive on the website. I don't know if the chart that we had, if we can bring that up again, not sure if that was the correct one, but the point we were making is that a lot of these stressed steel companies have seen their stock prices rise. So for instance, yesterday, Bhushan, Uttam Galva were all up. Today again, stocks like Bhushan, Uttam Galva, Electro Steel, Steels are all trading higher. All right, just speaking of banks, a quick note here on a report that came in from Moody's, not report actually, a credit review that came in from Moody's on State Bank of India. They were making the point that they remain cautious on the bank and the banking sector as a whole, pending some sort of understanding of the kind of haircuts that these banks will need to take on cases that are going into insolvency. So I think Moody's said that if the haircuts are at about 50 to 55%, then SBI would still be in a position to maintain its its tier 1 capital ratio ahead of the regulatory minimum. If it's a little bit higher than that, that's the haircuts, then perhaps there would be some capital struggle at the largest bank in the country. Harsha.
Let's talk about what's going on in bonds, particularly the corporate bond market. Foreign investment limit on India's government bonds is not spoiling the appetite for the country's debt. With FII's limits on G-Secs almost up, bond funds, particularly foreign investors, are starting to buy up state notes. When we mean state notes, we're really talking about the state government paper. Iras, you've called out some data. What is that revealing?
So I think Bloomberg News has a story as well on the site, and the data can be looked at in two different ways. The first point, of course, is, or the newsy point here, is that foreign investors who have shunned state government bonds for a very long time have started to, nibble into that segment a little bit. That's the overall foreign inflows, and I'll get to that in a minute. But if you look at the percentage of the limit that has been exhausted on state bonds, in the 1st of April, only about 5% or 6% of that limit had been taken up. Since then, as the central government bond limit has become completely, utilized, and there's very limited avenue for foreign investors to invest, they've started to come towards state bonds, which they have not historically been comfortable with. So in September, they had gone up to 9% of that limit being utilized, and now it's about 14%. Still very, very small. So it's not like they're coming in droves to invest in state bonds where, quality of financials, etc., is a problem. But they're starting to come there, and I think that's the point that the Bloomberg News story makes as well.
Aberdeen, Nomura are guys who are trying to sort of taste the waters here. the story points out that the state bonds offer about 60 to 70 basis points additional yield.
Yes.
In relative terms, and therefore it makes it attractive enough. The complaint, of course, is there is not enough data. We don't know. There's not too much information about state bonds, state bond market, state budgets. Details on announcements don't come through. That's the complaint that one of the investors from Aberdeen has pointed out. But yes, you're seeing some renewed activity.
Yeah, actually, and on that note, just want to mention two things. One is that in the last monetary policy review, the RBI said that they, from their end, will start to try and put out some high-frequency data on states so that investors do have a little bit more information on these state bonds and then can make a price differential between states that are strong fiscally and states that may be weak fiscally. But broadly, I think the story here continues to be that foreign investors are extremely bullish on Indian bonds. And bring up that first chart that you had up there. I want to point out that we are now very close to breaching the all-time highs in terms of inflows into Indian bonds. 2014, the full year, we got 1.59 lakh crore. As of now, which is towards the end of October, we have already got to 1.42 lakh crores. So unless there is some disruption in the global markets and flows slow down dramatically, you could perhaps take out that all-time high.
The flow story is really here more than in the equity markets, isn't it? In terms of pure size and quantum of how much money that's come in. We'll keep a closer tab on that. Do keep a tab on BloombergQuint.com. Let's talk about commodity prices. The recent spike in zinc has prompted one of India's largest zinc producers to break its tradition and take a rather unusual route. It has gone ahead and hedged about a quarter of its annual production as prices remain at 10-year highs. Swansea Afonso from Bloomberg News is here with us to tell us what Hindustan Zinc is doing and why. Swansea.
Yes, Harsha, the company has, as you said, locked in gains, prices basically for next year. So for the first half of the year, they have sold about 2,500 tons of lead and zinc at prices because they have seen this increased volatility in prices. We have seen the London zinc price 60-day volatility at a June high, which is like quite high. So that's the company took this decision, that after a lot of deliberation that they want to kind of lock in their prices.
Talk me through what's going on. That's the volatility for you, and those are zinc prices. Talk me through what's going on in these commodities. Both, I mean, you alluded to what's happening in the London prices.
Yes.
You're seeing prices, month on month jump significantly. Yes. You're also seeing an increase in volatility.
Correct. Yeah. So there's a perception that there has been a run up in zinc prices, a sharp run up, in fact, in the last year or so, and that pace will now kind of slow down, but prices will still remain high. With Hindustan Zinc expecting prices to be between $3,000 to $3,500 at least for the next few quarters. So they expect although they say that this is an exception that they've made in terms of locking in their sales, but they could review it depending on whether prices will go up further. So that's the call.
Swansea, thank you so much indeed for that.
All right, let's move into news coming in from the capital. The government's recent crackdown on shell companies unearthed black money worth more than $1 billion, said Minister P.P. Chaudhary in an interview to Bloomberg News. The Corporate Affairs Ministry is now expanding its probe to property transfers, which may have also been used to generate black money. Bloomberg News' Uni Krishnan is standing by with the details. Uni, what did you pick up from your interaction with the minister?
I mean, essentially two things. One is about the suspicious cash transactions that have happened post demonetization. The probe has unearthed that there were deposits of about 7,000 crores that have been made into the banking system. All this in cash and then deposited subsequently. So this has come under the scanner, and this is the larger drive of cracking down on shell companies and ensuring that a large part of this entire practice is taken out of the financial system and possibly improve ease of doing business and also improve foreign investors' confidence. The second part of it, like you said, is basically going after whatever assets are remaining of these shell companies. These are essentially real estate assets that they hold, and to ensure that these are not transferred and subsequently frozen. They have done both in terms of freezing of bank accounts, as well as they're now widening the probe to cover real estate assets of these shell companies. There are about 200,000 of them that are under the scanner. Show cause notices have been sent, and in some cases returns haven't been filed, so there were like genuine cases where activities have taken place. The bigger worry for the government right now is that some of them may have not filed returns for some valid reasons. So essentially, that's the other part of the puzzle, that they're giving a chance for these companies to come forward and prove themselves clean. So that's the entire drive that's happening.
Just another point, I suppose another objective of this exercise is to restore investor confidence, to say, come and invest. We're cleaning up the shell companies and so on. What about directors, independent directors? I remember a bunch of them were disqualified as well. What does the minister have to say on that front? And I understand there's also some sort of a early warning system that the government has been working on.
Yeah, so that's the second part of the entire exercise. That's data mining, using artificial intelligence to sort of raise red flags before a crisis unfolds. So I mean, the minister repeatedly said that so far we've been reactive, but this is the phase where we've decided to be proactive, so that we can avert crises like the one that we have seen in the past, like Satyam and all, where there were enough red flags which possibly were ignored. So that's the technology part of it. The other human aspect, like you mentioned about directors, yeah, that's something that the government has seized upon. There have been cases where the minister said, if it's a genuine case, we will see what remedy we can find out, because earlier, right now, the whole idea was to go into this and they found a lot of wrongdoing. So the first reaction was to possibly raise a flag of banning all the directors. But right now the government is sort of cognizant of the fact that some of them would be genuine cases and you can't possibly ban the directors. So they're working on that, and that's a genuine problem that a lot of investors and analysts and accountants have brought to the government's notice. So they seized of it. So they're possibly working on it. I mean, the minister said that possibly they'll take a few months to figure out how to solve this mess.
Uni, we leave it there. Thank you so much indeed for joining us. Uni Krishnan reporting from Delhi, Bloomberg News in Delhi. Watch out for two things this evening. 4 o'clock, the finance minister will be addressing the media. Also watch out for Infosys earnings, but out of time on this show. Thank you so much for watching.